Let's turn back to oil. Our next guest warns there's a shocking problem in supply right now. Oil analyst Paul Sankey runs Sankey Research. Your firm?
That's me.
Yeah, see how I did that? No flies on me. We had Halim on. In fact, we had her on a lot yesterday, talking about the surprise notion that there could be an OPEC production cut after they barely, gave the president anything with 100,000 a day. Is what you're saying based on that at all, Paul, or other things?
Well, I mean, in that statement, they did say that we're out of spare capacity, that we've got a supply problem. So I think what there was frustration from the Saudis that the oil prices come back as much as you guys have mentioned, yet they still see strong demand. They still see a problem with supply. And they actually also, for you guys, trading guys, saw a major problem between physical and paper markets. So they feel that so much liquidity is out of the paper market that the price is not really, that you see on your screens, is not really reflective of the physical market behind.
We had a long discussion this morning on that OPEC or the Saudis were complaining about price manipulation. Isn't it a cartel? Isn't that what that's what they do for a living, don't they?
Yeah, sure. Basically, I mean, yeah, they're trying to organize the price, but I think what they're really saying is there's a disconnect between the price you're seeing on your screen and what's out there in terms of physical reality, in terms of what they're seeing.
We don't need. Given that we've seen some progress, I think the markets rallied, the equity markets rallied from June 16th on because we thought inflation was at least moderating. If something really hits the fan in Germany and if Putin decides, I don't know, what you look at what's happening now, he's saying, Ukraine assassinated his friend's daughter. Yeah. I mean, if things blow up in terms of what they do with the spigot to Europe, that's totally out of the Fed's control and our control if energy prices spike.
Yeah, I mean, I was obviously listening to the show, and the one thing I would say that the government here can do is the SPR, right? So they're pounding the oil market right now with, as much as 1 million barrels a day of incremental oil supply coming straight out of our emergency storage. We're at 100 today. It's not working too well. So, yeah, it's very concerning. The next toss-up is hurricane season. Who knows? We haven't had anything yet.
Iran, a wild card?
Well, I think they're going to try and bring them back in, yeah, but it could take several months. The good news with Iran is you get, the government, again, is keen probably to get that oil back on the market. There's about 60 to 70 million barrels of floating storage there that can come into the market, and that's the other side of what we've seen this week. People saying Saudi very bullish, saying that basically we want $100 oil. People bearish, saying Iran's going to come back in. Beyond that, what you were saying about Europe is going to be about winter. That's terrifying. That's literally terrifying. It's
terrifying on a human condition level,
if not
on a commodity price level.
Well, I mean, I think the point is that we could get inflation coming back in, further to what you were saying.
Okay, so we talk about new lows in the stock market. What about new highs in oil? No one thinks that that's going to happen. Do you?
Yeah, no, I think that we're all kind of bullish into 2023.
To where?
I don't think we'll do much above 150 on a sustained basis.
But we'll see 150 again.
I could see 150 as being, the problem that we've got here is...
That's a long way from 90, Paul,
Sure it is. No, absolutely. But look at the global supply picture. The global supply picture is a mess. I mean, the Saudis themselves are telling you there's nothing left. Look in the Permian. This week, the rig count was down. We're at $100 a barrel, and the rig count's gone down. There's not a huge amount of growth coming from the U.S. at all, and we're the last grower. So, and if you look around the world, there's only like 10 countries in the world that can add more than like 100,000 barrels a day of incremental supply. Global demand right now is over 100 million barrels a day. That's 1,200 barrels a second. So, when we look at the supply side, we're like, yeah, you're going to 100.
But what was the pushback then when oil was at 129 and it cratered to 85? I think you would agree that it was probably the same setup, bullish scenario. So was it the dollar?
No, just wait one second. I wouldn't, because in March, when I said we'd do 110 to 150 this summer, you thought you would lose 2 million barrels a day of Russia, and you thought you would gain 2 million barrels a day of China, demand side. So where we're at today is 4 million bearish to the negative side, and we're still at 100. So actually, the summer passed very bearishly compared to where we thought we were in March. Sorry, but go on.
No, we got to go now. Yeah. They tell me things, and they seem really serious when they tell me these. Final word, though, goes to you, BK.
Oh, well, listen, I'm with Paul on this one. I think you got to buy oil. The biggest supplier in the world said, you know what? We don't want the price to go any lower. We're going to cut supply. That's all you need to know.
It's amazing. Paul, thanks.